Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Thursday, September 2nd, 2021. The S&P continues to remain what looks best to me as a corrective phase, and I would be labeling it as the minute wave 4. And it seems that what we've done, even though we did go up today, and the market did create a slight new high at 45.44 before pulling back yet again. But it seems that we may have gotten an A, a B, and a C. But if that completed it, which it may have, we then have to call that wave 1, wave 2, and now we're off in the third wave. And it really would need to pick up the steam to the upside. Being that we're pre-holiday and tomorrow's an expiration and also likely going to be slow, I'm feeling that what we may have gotten today is an A, this is an A, a B, and a C for a B wave. And now we're going to come down in a larger C wave to complete the wave 4. And what I have done is I have put up Fibonacci retracements to give us an indication of where we possibly could get. First of all, it would need to break below 45.19, which we saw on Tuesday, and likely down to at least the 0.236, which is 45.02. So again, I continue to look for the S&P to remain above 4,500 during this corrective phase before it would then launch higher in that minute fifth wave. But we need to also allow for a continued drop. And the next level below that 45.02 comes in at 44.77, right around in there. That's where the wave 4 would be 0.382 of wave 3. And that is the most common retracement for fourth wave. Doesn't necessarily have to come down there, but we are going to have to allow for it right now. Because again, tomorrow could be a lot of position squaring. We do have the expiration. We do have a long weekend in front of us. And so we might see that come in at several points during the day. Just position squaring and getting ready for that long weekend and whether traders want to adjust their long or short side. This can often happen before a long weekend. And I guess under the thin market conditions that we've been trading, thin volumes, that if there's any larger orders, they could push the market in both directions. So here's how I'm going to leave it, and this is what we could look for tomorrow. The first thing I'm going to do is I'm going to take that off, and remembering that we have that ultimate support for wave 4 at 44.77. And again, we have 45.02, and then we need it to get below that 45.19, excuse me, 45.12. That we saw on Tuesday. Now, if indeed the market has completed its fourth wave, and I'm going to have to label it here as a small failure, which fits, no problems on that happening, then we would be looking for the rally to continue. And what we have is we have 45.73, which would be next up, and that is where the minor wave 5 would be equal in length to minor wave 3, right there at 45.73. So let me just take this out again to the hourly chart, and let's put in, well, actually I can do the first one right here. Let's put in a Fibonacci extensions to show us the possibility or the potential that the minute 5 would have and where it should find resistance to complete. And I'm going to base that on that this small wave 4 did complete in a failure right there at 17. Okay. So what we would be looking for is the first most common relationship between a Fibonacci relationship between a fifth wave and the third wave is that the fifth wave would be 0.618 times the length of that third wave. That comes in at 4,622. But in between that, I have the absolute first resistance at 4,556, I'm going to call it, just round that up. And depending on the structure, I'll be looking for 5 waves. If this is 1 and this is 2, we're looking for a third that should at least get up to there, if not higher, before it pulls back in a fourth, and then continues to rally up. So we do have resistance at 45.56, 45.73, 45.81, 46.01, and then we get up into this cluster, this little bit of a cluster zone here, and that is 46.22, 46.25, up to 46.37. Being that it clusters a little bit higher, that's the area where I think the market will eventually go. Now, the next stronger is we have 0.382, which again is going to be the intermediate wave 5. The intermediate wave 5 would be equal to the intermediate third wave, or 0.382 times the length of that third wave, at 4,677. And once again, we do have a little bit of a cluster in that area. We have that the minor wave 5 would be 1.382 times the length of wave 3. And there it would be extending, and I would anticipate that it's going to extend, as did the third wave. And so I'm finding that more common in trades today, simply because of the addition, I believe, of the addition of all of the algorithms and how they move in and out of the market. Those levels do suggest that we can extend and get ourselves up into this area. We continue to build and have additional resistance levels all the way up to 4,800. Now, am I expecting that? Not necessarily. Is there a potential? Yes. So keeping potential open that this rally again catches fire and starts to push all over again, then we're getting into uncharted waters. And once we're up in there, larger orders, you're going to run out of sellers. Sellers are not going to be willing to sell it because they've got nothing to base it on. So if you're not hedging something which requires the sell side, or a sell order, or selling the underlying, then that's how you're going to find the sellers. And so straight buying would, I think, have some trouble and could add to the velocity of any rise. But we first have the potential that we're still going to come down in a C wave of minute 4. Once that's complete, then I would look for fireworks. I'd look for a stronger boost. And that's why I think it may wait until next week and after the holiday. But it could get going tomorrow. So let's bear in mind, if it does, this is 1, this is 2, and it's just in the beginning stages of a third wave. That means it just marches. It doesn't hesitate. It doesn't waffle. It doesn't decide it's going to go here, drop all the way back. It should just go and ultimately not break below 45.22, which is the low right there. It should not break below that level if indeed it's in a third wave. Now, if it's in a forming C wave down, then yeah, it's going to break that pretty easily. And it should do it quickly to the downside. So, you know, we're playing both sides. It's either got to be a quick move up to give us confirmation that's a third wave, or it's going to have a quicker move down to give us some indication that it is a C wave down. And so that is where I'm going to leave it. It's a very brief update tonight. I do continue to look for ultimately new all-time highs, once again, and above this, of course, 45.44, and with more power to get up there. So 55.73, 45.81, 46.01. Those levels have been in view for me for quite some time. And then we do have, if it extends, we have that additional up there. Do I believe it's going to do it tomorrow? No. I think we'll continue to be on the slow side and under light volume. But we could get up to 45.55. Why not? So this is where I'm going to leave it. And there is a holiday on Monday, as we already know, but Globex session will trade on Sunday, and then we'll trade again on Monday. And that's when I will make our next update. So the next update will be on Monday after the Globex Open.